Hi friends, myself Subrata Mukherjee and you are watching my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I am going to discuss another problem on holding company. This is lecture number 3 and you can find the other lectures in the playlist section of the channel. The following are the summarized balance sheets of Imperial Company Limited and Colonial Company Limited as at 31st March 2022. So on the liability side we have equity capital of Imperial Company Limited for rupees 10 lakh and that of Colonial Company Limited 3 lakh. Reserve and surplus 7 lakh and 3 lakh. Trade payable 1 lakh and 70,000. So total of liability side of Imperial Company Limited is 18 lakh and that of Colonial Company Limited is 6 lakh 70,000. Now on asset side we have non-current assets. Fixed assets for Imperial Company Limited 8 lakh 80,000 and that of Colonial Company Limited 3 lakh 10,000. Investment made by Imperial Company Limited in Colonial Company Limited for 20,000 shares at cost is rupees 2 lakh 60,000. And the current asset we have inventories 3 lakh 20,000 and 1 lakh 60,000 for the two companies. Trade receivables for Imperial Company Limited is 3 lakh and that of Colonial Company Limited is 1 lakh 70,000. We have cash of rupees 40,000 and 30,000. So total of the asset side of the Imperial Company Limited is 18 lakh and that of Colonial Company Limited is 6 lakh 70,000. Now notes to accounts, we have the segregation of reserve and surplus and into general reserve and surplus. So for general reserve, we have a balance of 4 lakh and 1 lakh 25,000 and the surplus account shows rupees 3 lakh for Imperial Company Limited and 1 lakh 75,000 for Colonial Company Limited. You are required to prepare a consolidated balance sheet as at 31st March 2022 showing in detail necessary adjustments and taking into consideration the following information. Imperial Company Limited acquired the shares of Colonial Company Limited on 1st April 2021 when the balances on their surplus account and general reserve were rupees 75,000 and rupees 80,000 respectively. Inventories of rupees 1,60,000 held by Colonial Company Limited consist of rupees 60,000 goods purchased from Imperial Company Limited which has charged profit at the rate of 25% on cost. So we have to prepare the consolidated balance sheet of Imperial Company Limited with its subsidiary Colonial Company Limited. So let us start. We have to prepare the following table. So first of all, I have to write as date of acquisition. I would like to request all the students who are watching this lecture to follow the process that I am adopting here to solve the problem. So once you go through the process and you practice for 1 or 2 times, then you will be able to understand the method of solving a problem of holding company. So first you need to write the date of acquisition, that is on 1st April 21. Next, degree of control. So Imperial Company Limited is having a control of 2/3 of Colonial Company Limited. So 20,000 shares has been acquired by Imperial Company Limited and there were 30,000 shares of Colonial Company Limited. So 2/3 is the degree of control. And what is the minority interest? Minority interest is 1 minus 2 by 3, that is 1/3. Next, we have to prepare a chart that is called as control chart A, which this chart is very important. Control chart A. So we have to prepare the following columns, particulars, then I am writing here as amount, then Imperial Company Limited, and the share of Imperial Company Limited is 2/3, and that of Colonial Company Limited is 1/3. So the first item in control chart A, we have to record the capital profit. Now under capital profit, we have the pre-acquisition general reserve and the pre-acquisition surplus. So balance of pre-acquisition surplus, it is given in the question that is on the date of acquisition, the balance of Colonial Company Limited was having a surplus of 75,000, and pre-acquisition general reserve was rupees 80,000. So total capital profit is rupees 1,55,000. So what is the share of Imperial Company Limited? This is 2/3 of 1,55,000 is 1,03,333, and the share of Colonial Company Limited is 51,667. The next point, we have to write the balance of post acquisition surplus. What is the balance of surplus of Colonial Company Limited on the date of balance sheet? So I am writing here balance as on 31st March 22. It is given in the question that the balance of surplus of Colonial Company Limited as on the date of balance sheet was rupees 1,75,000. So less pre-acquisition surplus. So I have already recorded the balance of pre-acquisition surplus was 75,000. So the post-acquisition surplus was 1 lakh. The share of Imperial Company Limited is 66,667, and that of Colonial Company Limited is 33,333. Next is post-acquisition general reserve. So post-acquisition general reserve. So we have to write the balance of general reserve of Colonial Company Limited as on 31st March 22. So I am writing balance as on 31st March 22. It is given in the question that balance of general reserve of Colonial Company Limited as on the date of balance sheet was 1,25,000 less pre-acquisition general reserve. So pre-acquisition general reserve was 80,000. I have already recorded. So the post-acquisition general reserve balance is 45,000. So we can write the share of Imperial Company Limited is 30,000 and the share of Colonial Company Limited is 15,000. And the last point is to record the share capital. So balance of share capital of Colonial Company Limited as on the date of balance sheet was rupees 3 lakh. And share of Imperial Company Limited is 2 lakh, 2/3 of 3 lakh is 2 lakh, and share of Colonial Company Limited is rupees 1 lakh. So we have to add up these four balances in order to get the value of minority interest. And you will get a sum total of 2 lakh, and this is the balance of minority interest. So this is control chart A, And now we have to prepare control chart B. So this is point number 4, control chart B. So here in control chart B, we have to write the cost of investment. And what is the cost of investment? It is given in the question, 2,60,000. So Imperial Company Limited purchased 20,000 shares of Colonial Company Limited for rupees 2,60,000. So I have written here cost of investment 2,60,000 less face value. So what is the face value of the investment? 2 lakh. You will get this figure from control chart A, the share of Imperial Company Limited in the share capital of Colonial Company Limited. So this is 2 lakh. And what is the amount of capital profit? So balance of capital profit or the share of capital profit is 1,03,333. So the capital profit is going to reduce the cost of investment. So I am writing here the capital profit as 1,03,333. So the sum total of face value and the capital profit is 3,03,333. Since the value of the face value and the capital profit is more than the cost of investment, so you have to write here capital reserve. So if the cost of investment is more than this figure, then we write as goodwill. And if this figure, that is the face value and capital profit, is more than the cost of investment, the difference is credited to capital reserve. So the value of capital reserve is 43,333. The next point we have to record here as consolidated surplus. So I have to write first the balance of surplus of Imperial Company Limited as on 31st March 22. It is given in the question the balance of surplus of Imperial Company Limited as on the date of balance sheet was 3 lakh, and we have to add the share in post acquisition surplus of Colonial Company Limited. So this is 66,667. So you will get this figure from control chart A. So you see in control chart A, the share of Imperial Company Limited in the post acquisition surplus was 66,667. So I have to add this figure with the balance of Imperial Company Limited, and this total is 3,66,667. Now it is given in the question that inventories of rupees 1,60,000 held by Colonial Company Limited consist of rupees 60,000, goods purchased from Imperial Company Limited which has charged profit at the rate of 25% on cost. So there was an unrealized profit in the inventories. So we have to wipe out the unrealized profit in inventory. So unrealized profit in inventory. So the balance of inventory of 60,000 was held by Colonial Company Limited, that was purchased from Imperial Company Limited, and Imperial Company Limited made a profit of 25% on cost. So we have to multiply the 60,000, which is at sales figure. So 60,000, multiply it with 25 and divide it with by 125. So 12,000 is the unrealized profit in inventory. So the balance of consolidated surplus is 3,54,667. Next, we have to write the consolidated general reserve. So this is point number 6. So balance of general reserve of Imperial Company Limited as on 31st March 22, that is the balance sheet date. It is given in the question, the balance of general reserve of Imperial Company Limited was 4 lakh as on the date of balance sheet. And we have to add the share of Imperial Company Limited in the post-acquisition general reserve. Share of Imperial Company Limited in post-acquisition general reserve. So you will get this figure from control chart A, and this figure is 30,000. So the total or the consolidated general reserve of Imperial Company Limited happens to be 4,30,000. So these are the 6 working that we have to do before preparing the balance sheet. Now it's time to prepare the balance sheet. So I have to write here the consolidated balance sheet of Imperial Company Limited with its subsidiary Colonial Company Limited as on 31st March 22. So first of all, we have to write the liabilities, that is shareholder fund. So we have a share capital of Imperial Company Limited for rupees 10 lakh. Then the capital reserve, from control chart B, we have calculated the value of capital reserve as 43,333. Then we have to write the balance of consolidated surplus, which is 3,54,667. Then the balance of general reserve. So balance of general reserve is 4,30,000. We have already shown in point number 6. Then the trade payable. The total trade payable of Imperial Company Limited and that of Colonial Company Limited is 1,70,000. So 1 lakh is the balance of trade payable for Imperial Company Limited, and that of Colonial Company Limited was rupees 70,000. So I have to write here as 1 lakh plus 70,000. This will give you 1,70,000. And the value of minority interest was rupees 2 lakh. So I have already shown you from control chart A the value of minority interest, and total of liability side is 21,98,000. Now come to the asset side. First we have to write the non-current asset. And the balance of fixed asset given in the question, fixed asset, you see 8,80,000 is the balance of Imperial Company Limited and 3,10,000 is the balance of Colonial Company Limited. So I have to add up this 8,80,000 plus 3,10,000. So you will get a total of 11,90,000. Then we have the current asset. First we will write the value of inventories. So I am writing here the current asset. And the first item is Inventories. 3,20,000 is the value of inventory of Imperial Company Limited. 1,60,000 is the value of inventory of Colonial Company Limited. From these two figures, we have to reduce the value of unrealized profit for rupees 12,000. So the total value of inventories is 4,68,000. Trade receivable of Imperial Company Limited is 3 lakh and that of Colonial Company Limited is 1,70,000. So I have to add the value of trade receivables. 3 lakh plus 1,70,000 is 4,70,000. And the last item is regarding the cash. So we have to add up the value of cash of 40,000 and 30,000 of both the companies. So cash 40,000 plus 30,000 is 70,000. So total of the asset is also 21,98,000. So please have a look at the solution. So first I have written here the date of acquisition, then degree of control, then minority interest. Then I have prepared the control chart A, which is a very important table that you have to prepare. From this table, we have computed the value of capital profit, the amount of the post-acquisition surplus, then the general reserve, post-acquisition general reserve, then the share capital. From control chart B, we calculate the goodwill or the capital reserve. So in this problem, we get a value of capital reserve for rupees 43,333. Then in point number 5, we have computed the value of consolidated surplus, and in point number 6, we have calculated the value of consolidated general reserve. And at last, we have prepared the consolidated balance sheet of Imperial Company Limited with its subsidiary Colonial Company Limited as on 31st March 22, and we have a sum total of 21,98,000 of both liability and the asset side. Hope all the students have recorded the questions with solution in your notebook and try to follow the process that I have adopted here to solve the question. In spite of this, if you find any difficulty in understanding, feel free to communicate with me through email and the contact number given in the description box. Thank you. Thanks for watching the lecture.